All right, let's jump right in. Today, we're talking about how one single thing, one commodity, is sending this massive shockwave through the entire economy. It's a domino effect that is already, right now, making its way to your wallet. You know, that quote just nails the feeling perfectly. For months, it really seemed like the economic picture was finally starting to clear up. But now? Well, this one issue has kind of come out of nowhere to complicate everything, and it has everyone from Wall Street to Washington feeling pretty nervous. Okay, so let's dive into what's actually going on here. To really get it, we have to talk about the absolute boogeyman of the economy, the price of oil. I know, that sounds super dramatic, but it's pretty much the reality. Just think about it for a second. Your groceries, those Amazon packages you get, the fertilizer that helps grow our food, even the plastics in our homes. Almost every single thing we use involves oil in some way, whether it's for shipping, manufacturing, or as a basic ingredient. And this shows you exactly how that chain reaction works. When oil prices spike, it isn't just about what you're paying at the pump. Suddenly, businesses see their costs skyrocket. And what do? They're forced to raise prices on you, the consumer. And just like that, the inflation we all thought was finally cooling off, well, it starts to heat right back up again. And the speed of this is just staggering. That number, 10%, that's how much the national average for a gallon of gas jumped in just 1 week. An increase like that shows you this isn't some slow burn. It's an immediate, sharp hit to basically everyone's budget. So this leads us to the very next domino to fall. An oil shock like this puts the Federal Reserve, the people in charge of trying to keep our economy stable, in a truly impossible spot. And this brings us to the one word that makes economists absolutely shudder: stagflation. It is the worst of both worlds. You've got prices rising fast, but at the exact same time, the economy is slowing down and unemployment is going up. It's a toxic mix, and because this whole shock hits the supply of energy, which is a core cost for everything, a lot of analysts are now afraid that stagflation is a very real possibility. And here is the trap the Fed is caught in right now. I mean, look at this. If they cut interest rates, sure, it might help a weakening job market, but it would almost certainly pour gasoline on the fire of inflation. But on the other hand, if they hold rates steady or even raise them to fight that inflation, they risk shoving an already slowing economy into a full-blown recession. There is just no easy answer here. So what's their big move? For now, it's to wait. Fed Chair Jerome Powell has basically come out and admitted that with so much global uncertainty, they're hitting the pause button on rate cuts. They're stuck in a holding pattern, which means the rest of us are stuck waiting right there with them. So, with the Fed pretty much on the sidelines and oil prices jumping, the big question is, how are the financial markets handling all of this? Well, if you had to boil it down to one word, it would be uncertainty. The stock market has definitely felt this uncertainty, yeah? It's pulled back from its recent highs. But before anyone hits the panic button, it's really important to add some context here. Pullbacks of this size are actually extremely common. In fact, on average, they happen about 3 times a year. So when you look at it historically, this current dip isn't really that unusual. And history gives us even more perspective. This data from the Carson Group looked at 40 major geopolitical events, and it shows that while markets do take a small dip at first, they tend to bounce back and are actually up within 6 months. It seems like that initial panic, well, it rarely lasts. And it's not even a simple story of everything just going down across the board. The housing market, for example, is actually starting to balance out. There are more homes for sale now, which gives buyers a bit more power. And then you have some assets, like Bitcoin, that have recently been doing better than traditional investments. The real driver here isn't necessarily the fundamentals. It's just plain old uncertainty about how long this situation is going to last. And that uncertainty leads us to the final and maybe the most significant piece of this entire puzzle, a massive debate happening in Washington over a truly mind-boggling amount of money. $200 billion. That's the size of a proposed funding bill designed to address the ongoing geopolitical conflict that's feeding this oil shock. And just to be crystal clear, this is on top of the regular defense budget. To try and put that number into perspective, an analysis from Representative Ro Khanna shows what else that amount of money could cover. We're talking about things like free college for every American, affordable childcare, 1,000 new trade schools. Now, this isn't about which option is better. It's about understanding the incredible scale of the trade-off that are being debated right now. And this really brings us to 2 completely different ways of looking at this moment. On one side, you have the view that this is just a temporary shock. People who believe this argue that true stagflation is incredibly rare, the Fed is still ultimately looking to cut rates, and the smartest strategy is just to ride out the storm. The other view is that no, this is a full-blown crisis that demands a massive government response, even if it means cutting hundreds of billions from domestic programs to pay for it. Which leaves us all with this one last question. In a moment like this, when there's so much uncertainty and all the economic signals are scrambled, what is the right move? Is the greater danger failing to prepare for a coming storm? Or is it panicking and missing out on the recovery that history tells us so often follows? That's really the dilemma that every single person is facing right now.